Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hear you loud and clear, Coach Jay. How are you doing at the buzzer, people?
Buzzer
Welcome
beaters.
back.
Buzzer beaters. Welcome to our buzzer beaters. Welcome to the show. Happy Thursday. We've got one day left in the week. Hopefully everybody had a good day. And welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this session is to review what happened in the markets for the day. We may talk about some markets that we have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of these opportunities while managing our risk. This is your first time here. I'm Coach Jay. I was not 15 years old when we took that thumbnail picture. I've been trading for about 13 years and in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 40 years. I'm here to share some of my experiences, some wisdom, and hopefully help you become a better trader.
Thank you for that, Coach Paul. You are all our chat, our audience. We thank you for being here all the time. We got Coach Hoop in chat as well, helping us moderate this thing. So let's get going. Interesting day today in a bunch of different markets. Of course, government shutdown day number 9, 6th trading day of the government shutdown. So we're not getting. All right, sounds good, Coach Hoop. We are not getting some of the economic data that we're accustomed to, but we do have Fed speakers speaking all the time. Coach Paul, I was just in a meeting with my VIPs, and someone said they've had the best time this year so far trading the equities because there's no numbers, there's no news.
Well, you take the words straight out of my mind. Like, it was my immediate, yeah, what do we need it for, really? Trade the market. And that's my opinion, but yeah, it's great. That's actually great to hear. It makes it easier to stay on a program without some kind of sideways missile hitting you every morning.
Right. Just trade the markets, right? Just trade the markets without the headlines. It does feel a little weird because, you're always just like, okay, there's a number supposed to be coming out at this time. What do we do? Everyone's looking around the room. It's just like, well, we just get to trade. All the dollar needed was no data. With that being said, when all this data eventually does come out, when the shutdown is over, whenever that might be, we know the last one was 34 days. What happens then is the question. And in my opinion, volatility. But we will see. We will see. We have markets making all-time highs, silver making all-time high. Just a lot going on here. We got a Michigan sentiment number. Michigan sentiment, is that are we going to get that? Do you know? That's tomorrow.
It's the University of Michigan.
Okay, it's a private school.
Yeah.
There we go. So we will be getting that University of Michigan sentiment number tomorrow. We got more
the
Fed
Wolverine
speakers.
Number.
Yeah. Bunch of Fed speakers. We heard the president also speaking earlier about peace in the Middle East and potentially coming to a deal where hostages are being released as early as Monday. Anything else you got on the news?
No, the big headline, peace in the middle. Well, the Gaza conflict may have ended.
Right.
I won't say peace in the Middle East. I'm an old man and I've never seen it. So, but good news, at least for the intermediate term. So the big headline. Other than that, it was that what was that brand? First Brands, the auto company declared bankruptcy a couple days ago. I think that finally hit the market, weighed a little bit on it, but yes, it's great without the Fed, without government interference.
Yeah.
So
absolutely. We did have Nvidia making a new all-time high. Nvidia stock rising on major AI chip export approval. NVIDIA's first major export clearance to the Gulf nation, to the UAE, has been approved. Uh, we saw NVIDIA making all-time highs, and we know it's 15% of the NASDAQ. It might be a little more heavier weighted now because NVIDIA made all-time highs and everything else sold off throughout the day. Let's take a look at the quote boards. Not a lot of green on this quote board today. We got 4 things to choose from. But first, we go to the downside. We had silver down 2.69%. I kind of want to show the charts for all of these because silver was up 1.5% today, this morning when we were doing the opening call. But watching the market's reaction at whole number levels, $50,
What was today's high?
49,965. There was 150 contracts offered at 50 even.
96 and a half. So what is it? 2011, 2012 was the last time we.
Yep. Yeah, 2000. I think it was 2011 last time we were up here, and then you got to go back to 1980s the last time we were up here. But spot silver did make a new all-time high.
1980 to be specific.
1980, right? July.
When I first started,
January. Oh wow.
I was marking aboard the silver prices. They were either up $7.50 or down $7.50 every day. $7.50.
That's huge.
Yeah, that was the limit. But just when you thought it was safe, silver gets whacked.
Right at that major. Man, I mean, shit. I wish I was a trader I was in. I was watching it. I was watching it, and I was like, "Hey, silver is worth watching coming up to this $50 level because that's not a small level to break through." And no one in the world had enough of an account, enough confidence to trade silver above $50, and that is on a one lot. This is probably $3 in silver. Coach Paul, what is that? 9,000 on a mini?
No, $3 in silver.
Yeah,
At $50, a dollar is 5,000.
5,000. Okay, there you go. Huge move.
Yeah, 5,000 a dollar.
Oh, 5,000 a dollar. Okay.
$3 range.
Yes. Okay.
$15,000.
$15,000 with a mini. And do you take that trade? Is can you limit the risk goes on a trade like that? And I hate to even talk about a trade that I didn't take. The risk goes right above 50. Right. So the idea is sell as close as you can to 50, and if they don't trade over it, you just hold on until they do. And in this case, they never did.
Let's look at it well, it didn't hit.
No, it never even got close. Well, it got
So
close. It got close, but it didn't hit.
Did we get a J trade on the high?
Not exactly at the high, but we did get one on the highest volume of the day at that point.
Okay. Well, wow. They were not screwing around.
No.
Was it because there's a peace announcement in the Middle East?
I don't know.
And exactly we don't know. But we know this. If you didn't have a stop in and you were long, or you fought it, you're done. You're done.
Yep.
It's unforgiving markets. Why don't trade it? I'd rather trade gold, but silver is an unforgiving market. Just when it looks great, it will eat you up.
Yeah.
Let's look at the daily. Did we have a engulfing candle here?
Somewhat, yeah. There's that huge wick on the upside. We're gonna see a common theme here in these metals. That is also the highest volume candle of the year in silver. Right off of those highs. Does it mean the rally is over? Probably not, but significant for sure. But yeah, we took out a couple of days of range, but it's really still right back into the range.
Yeah, it's the first time it's taken a shot to the chops, on the buyers. I mean, it's the first solid hit.
Yep.
So it's got the potential. or frame, but what you said, this is not a rollover,
No.
and this volume is the biggest of the year.
Yep.
That's to be pointed out and framed out. Why? Well, when you're on with Hogue tomorrow, ask him about the silver open interest.
Oh yeah.
If you get the biggest volume of the year and you get a drop in open interest, you can almost call this a blow off. You know, almost. I would call this a blow off top. Heavy volume, lower open interest, and probably the biggest range of the year, $3.
Yeah. Close to
Um,
it.
yeah, that's on my that would be on my list. I don't trade it, but I would look tomorrow for any signs of weakness or a failed buying. Anyway, I'm looking. If it gets under that today's low
Hmm.
and establishes for like a half an hour, it's worth taking risk because if it is, it's almost a 3-bar reversal too.
Yeah. Almost. Almost.
Okay. Now, if I'm long this and I just heard that, I'm paying attention.
Oh yeah, for sure.
I don't necessarily want to get out, but someone did.
Someone definitely did, and they're probably happy about it. Uh, if I was long from $40 or $30, I'd sell a decent amount right below 50s. Why not? Why not?
Oh, Coach Coop. Coach Coop, you're filling big shoes
Oh, breaking
um,
up, coach.
for Hope tomorrow.
You kind of breaking up, Coach Paul. Is that on my side? Is that? Yeah, Coach Paul. If you want to try reconnecting.
All right. I'll be back.
All right. Uh, let's see here. So we got silver down 2.65%, natural gas down 2.76%, and micro Ethereum futures, our biggest percentage mover to the downside, down 4.16%. To the upside, we have cattle up 4.3%, the Nikkei up 0.95%, and copper, our biggest percentage mover to the upside. Copper, our biggest percentage mover to the upside, up 0.96%. To talk about our big four, we have everything down. Crude oil down 1.79%. The S&P down 0.36%. Gold down 1.94%. And the NASDAQ down 0.22%. Coach Paul will be back in a minute. Why don't we take a look at gold since we already talked about silver? Yeah, Hogue is going on vacation, so we will miss him. I think he'll be out for a week. Let's take a look at gold here. And Coach Paul will be back, but we have gold made a new all-time high. I think you're back, Coach. There you go.
Checking.
Sounds good.
Continue.
So we went straight from silver to gold. Gold made that new all-time high yesterday, 40.81s. Another market where this is, again, the highest volume candle on the daily in gold. Now, does that mean that the trend is over? We do technically have a 3-bar reversal here on a daily. But what I want to point out is the last time we had a highest volume candle on the daily was April 22nd. There had to be some tariff headline or something around there. If we mark out that candle, this one wasn't a 3-bar reversal and has, that wick on the other end. This is the candle that sent us into that 130-day consolidation. It set the high and then we consolidated for 130 days before this leg up. So like Coach Paul was saying in silver, I'm going to do the same thing here. Mark out the high and low of that candle. The low is 39.5790. The high is 40.7790. And let's just watch. Let's just watch how the market responds here. Because the last time, again, it didn't break the trend, wasn't over, but it sent us into a really long consolidation. I'm just curious to see what happens with this this next move. Very necessary pullback on a higher time frame. I think a lot of us would agree with. This market got pretty extended. From the breakout of that consolidation, we were up about 20%, above a major level 4,000. Not surprised to see a little bit of profit taking. That was a wild move. It doesn't even, it looks, when you look at it on a 1 minute, on a daily chart, Coach Paul, it doesn't look that bad. It looks like, oh yeah, that's just a pullback. Um, we're talking about $120 range though in gold.
Yeah. All-time highs. Am I robot again?
Yeah, you're a robot again.
Hang on. I think I have a problem.
Yeah, you are a robot again. Look at the difference in volume trend between then and now. It's been increasing daily recently.
All
Yeah,
right. How about now?
yeah, I think you're good now.
All right. I had to shut down my CQG quotes.
Got you, got you. Hey, Manfred, good to see you as well. Manfred in the chat. Brad Sims, so that's a good point. So one of the things we pointed out earlier in this week, was that last week, was the increasing volume that we're seeing in gold, right? And then asking, is this sustainable, right? This type of volume here, 420,000 contracts traded in a day, gold can't do that every day. Um, it's not going to do that every day, right? We're talking about a candle that's an anomaly now on the daily because that is the highest volume of the day. It is a little bit different from the last time, like Brad was saying. The last time we had kind of some spotty volume, with that trend moving higher, and then we had that blow off top volume. This one is a little different, but I'm gonna measure it the same way, mark it out the same way. That is pretty significant. What happened there? Uh, September 30th on the 4 hour, see $73 red candle. And then we got all time high. So Rich, yeah. So we did have a pretty nice sell off September 30th, where we had that aggressive sell off. Yeah. So, and that's why we're saying, right? I'm not saying that the trend is over here, but that's a big shot here with all that aggressive selling that came in. We've seen it get bought up already, right? Gold is closing 40 points, 30 points off the low. And this is an extremely resilient market, and I don't think anything fundamentally has changed. So it's hard to say that the trend is over. But I am going to be watching closely to how the market responds at these ranges.
Well, once again, we could have a double top here. On top of that, almost the same high as that. We couldn't break yesterday's high.
Mm-hmm.
It's within earshot, and then we fail and close under that candle.
Yep.
On a daily. That just, I think we're going to the 20-day moving average.
Which right now is at 38.30.
Kind of where we started the week.
Right. Pretty much. Yeah, and like, how does this affect our day trading? We're under that 4,000 level. Again, I don't think this trend is over. But these are levels of interest now, right? This low of this daily candle is a major level of interest. If I see price get down here and no volume is pushing it, this is not financial advice, but Jay might be long gold down here, because all of this aggressive selling that we saw, it stopped at a level, right? So either that's where the buyers are comfortable buying, right, where they may not want to continue paying higher prices, or sellers are comfortable stopping selling for now, right, where we saw that bounce. So this range is going to mean a lot. Hopefully not another 130 days, but it will mean a lot until it doesn't.
Well, at this level, I've really piqued my interest. This doesn't happen that often.
Right.
I mean, all-time highs, biggest volume of the year. I mean, this is a little different. It is definitely an alarm. Now, without calling it, if it is, it could pick. There's a lot of longs left in the gold market.
Yep.
And getting kind of, I won't say lazy, but but if it picks up steam, I mean, let's look at the weekly. And because we're coming into, we have Friday now. What interests me here, looking at that, I mean, the lows of this week are going to be very important. I said, well, this is what we're basically, we started Sunday night or Monday. It might even
Yep.
be a little higher. Now, tomorrow, let's say we have weakness and then we get below that on Sunday night, Monday, this week's low, and that gets ugly. That's like an island top, and you don't see those very often. That isn't like an top. All of that buying at all-time highs. This could, like I said, I'm very
Oh,
interested.
you're a robot again, Coach Paul.
Oh my.
A robot again. But what he's saying is if we take out this weekly low, then it is for sure a lookout below. Low of the week right now, 39.09 in gold. Let's take a look at a 30-minute chart, see what happened on the day. Last night, if you guys were watching slow markets, took a couple different trades, and there was a candle that we talked about on a shorter time frame. This 40-20 area was really interesting, right? Last night when we were talking during slow markets, we pushed down to that in the overnight session. I took a short into it, didn't end up taking the long. And then we talked about, is this market going to break out and make all-time highs or is it not, right? If we look at what the volume did, Globex open right here. Coach Paul and I mark that out all the time. Price left that range to the upside. Volume never did. Just same way price left to the downside and volume didn't, gave us a nice opportunity to take a long on the extension out of this range. Volume never left as well and selling us right back through it. Right back down to that 200 moving average. Interesting spot to watch as well, 4,170 right now. Let's watch the market's response to that. Tomorrow, what I will be doing, mark out this candle, this 30-minute candle, highest volume candle of the day. The low 39.76, the high 40.28. And 50% is right at that 200 moving average, right? Here, my analysis, my prep work is done right now for gold until the Globex session opens up and maybe changes this information. Tomorrow, new all-time highs. It could be. It very well could be, right? If we get back above this 4,000, back above this 200 moving average, we very well could see all-time highs in gold tomorrow. But let's see. Let the market decide that, and I will trade it from there. Really aggressive sell-off, though, and, from that consolidation. Thanks for what you're doing after the buzzer. Oh yeah, absolutely. I love doing this. Hey, this is as much as for me as it is for you guys. Part of this is my prep for for the next trading day. But it's always great to review as well to see how you did during the day, see what you could have done better, etc. So if you weren't watching slow markets last night, I would suggest going back and looking at that gold trade. It wasn't a very long trade. It was maybe 15 minutes starting at 9 p.m. Eastern time. So you could just watch that 15-minute segment of it. But if you want an idea of how I execute trades in real time, I think that is a really good example of it there. Man, what a sell-off here in gold. Any questions on gold? If not, we'll move over to the equities. When I was young, my mom told me the people on the TV are not real. We are very real, I promise. We're not AI yet. Keyword being yet. All right, let's take a look at the daily in the S&P. Made a new all-time high today, 68.12 quarter, 68.12 quarter, and did it the way the S&P has been making all-time highs. We make a new all-time high and we sell off. Taking a look at the 30-minute chart. Yesterday we were talking about, and this is why in gold, similar. Okay, so let's look at this here. This setup right now in the S&P, this was yesterday in the S&P, right? We closed under that 200 moving average. We had that aggressive selling volume that closed below it. And I'm pretty sure this was our analysis yesterday. mark out this 30-minute candle, and see how the market trades around it. Do we get back above that 200 moving average, or do we stay in this range? That high volume candle, highest volume of the day, was the low of the session in the S&P today. We made a new all-time high. Actually, that's not today. That was 2 days ago. My bad. Okay, that was 2 days ago. We got under that 200 moving average. I do remember that's what it was. We skipped at the buzzer yesterday. Today's price action brought us right back down to that high volume candle. And that's why I'm marking that one out in gold. See how we can continue to trade back to these prices? Volume profile traders are going to understand this, right? Whether it's volume point of controls that are unchecked or just high volume nodes, we come back to these areas all the time, which I think is a good reason to use them as visual targets or visual cues. So today in the S&P, we opened up above 6,800. And what happens here? Price moves higher, makes a new all-time high, but we don't get any volume to continue to push us higher. Above 6,800, we're going to need to convince some new buyers, right? Because if we trade above 6,800, people start thinking about 7,000s as a target. If they're not allocated the way they want to be, we may not see buyers continue to push us higher. VWAP never left this Globex opening range to the upside. It traded right at the high of it. Price went above, and just a really nice sell day, right back down to that high volume where we know there were some buyers earlier. So let's see what that means going into the rest of the week. We are, again, right at that 200 moving average on the 30-minute chart. Coach Paul is back in the green room. Let me get you on screen here. 1 second. And we're back. All right, there you are. You're on screen now, Coach Paul. How we doing?
Hopefully I'm not a robot anymore.
You're good now. You're good now.
All right. Sorry about that.
You are good now. All good. Yeah, we were just going over the S&P, sitting right at this 200 moving average again, right in the middle of the highest volume 30-minute candle for the week. Interesting day. Made a new all-time high and sold off. We're just not really seeing any aggressive push at all-time highs. It's like even yesterday we made those all-time highs and it was just a slow grind up. And when you don't see that volume, you get these aggressive pullbacks. And this one happened pretty early. Someone asked why no traders on Topstep trade the 1 hour and 4 hour time frame. It's all a preference thing. To me, what you get from the 1 hour is what I get from the 30-minute. But if the 1 hour works for you, keep using it.
Yeah, do what works for you. We have people that will trade the 30-second candle, 1 minute candles. Trade your personality, whatever works for you. I just trade the half-hour candle. But for day trading, I've changed. Thanks to Coach Jay, I use the 3-minute.
So you're looking for an answer for what is the greatest time frame chart to trade ever, it's the 3-minute. But trade whatever works for you. Trade whatever works for you.
Wow, what do you call that start this morning?
Put this in the dictionary under urgency, because this was a great example of that urgency trade that we talk about. If you're wondering what we're talking about, opening range, I'm going to change this to regular trading hours real quick so we can see this even more cleanly. We have the 3-minute opening range in this case, because I use the 3-minute chart with VWAP attached to it. And what we define as urgency is this volume aggressively leaving this range. And in the first 9 minutes, 12 minutes of the market, price was leaving the range, volume was as well. We can see how resistant this VWAP was the entire way down. We pretty much sell every time we got up to it. Doesn't always work out like this, but in this case, this is A++ urgency in the equities. My profits from the day came from this trade. Because these are the ones we look for.
It's interesting to put a volume profile in the night session to the 8 o'clock candle on the half hour, or to that candle I usually use the half hour
So volume profile from Globex
from
Open
yesterday's Globex Open on
to
a
the
half hour.
New York session open.
Yeah.
Okay, there we go.
Now, where's that point of control?
Right at the low, pretty much of the opening range.
Okay. Now, all that night session, we came to a volume point of control overnight. And early, we couldn't hold that.
Mm-hmm.
I'm watching that pattern for a while now. That's important. So
Interesting.
whatever happened overnight was rejected. Now we were a little higher on the day at that, especially in the Nasdaq. We were what 100, and we were up.
Yeah, on
I
the
think.
Nasdaq we were up. Yeah, we were.
Yeah, and when the volume came in, the real volume, not the overnight volume, that buying was rejected early.
Mm.
That's why we get urgency. Like we said, it's at here. Hey, Coach Jay, I got 5,000, and
I'll
you
buy
bid
two.
for five. Oh,
Yep. Huge imbalance.
huge imbalance, which wasn't traded out until later in the day. Which actually could this be a good setup to buy?
Yeah. Yeah. I mean, we came back down. We were talking about this high volume 30-minute candle from the week on the week so far. That range, that was 11 a.m. Eastern time on the 7th. Still holding in that candle, right? Some volume above this high, 67.82. Yeah, we could go right back up to those highs, I think. We got that 200 moving average right there as well, 67.82.
Now let's do another volume profile for just the day session that we just starting at 8:30 and see where the point of control ended up.
67.78, right under that 200 moving average.
Right under it's all. So let's watch that tonight. So what does that mean? We've had a lot of volume. We're right just under that volume. That is at the 200. If we're going to be honor that 200 and we find some buying, we should see it. We could see it tonight.
Yes, we can. Yes, we can. Interesting. Nasdaq a little bit different. Let's take a look at the Nasdaq. Made a new all-time high last night as well. Watching markets reactions to major levels. 25,400. No one convinced enough to buy it. 25,394 was our new all-time high in the Nasdaq. Very similar story here. Stronger is what is that white line down there, chat? This is a 30-minute chart.
It was almost to the tick, by the way.
They continue to get away with this. They continue to get away with this every day.
And that's a healthy break.
Yep.
Like I said, making, and I think we've seen this pattern. There's a couple times they make all-time highs overnight, and early in the day session, it just gets hit
Yep.
because that all-time high it isn't backed by volume. But nice bounce off of that 200.
Yeah. Janish says it looks so scary to buy at the 200 moving average. It does. It is a scary trade to take, and it doesn't always work. Look, in this case, it blew right through it, right? And so here's the thing, Janish, right? Little secret for you. You ever go back to, or if anyone has kids, right? If your kids get scared of something, they're like, "Oh, I think there's a monster under my bed or in the closet or something," right? What do they usually do? They're not going to go and look in it first, right? They're going to tell you to go. So you make sure it's safe. You don't have to buy here. Let somebody else tell you that there's no monsters in the closet. And then you can buy, right? Wait for confirmation that, yes, the market is going to stop here. And then you don't have to even worry about this. You might have to sacrifice trade location a little bit, but somebody else who is going to maybe trade the size that can stop the market here. Let them show you that first, and then you buy. Because yeah, that is a extremely scary trade to take. We're down 200, 300 points from, or yeah, 250 points from the high. And you're like, oh yeah, I'm buying it. But
It's on sale.
it's on sale.
Now we could take the 5 minute and mark that 200 where it touched the 200. We can mark that on half hour. Go to a 5 minute, since most people enjoy the 5 minute. First time we touch it, and put a VWAP. And by the way, you're going to have to take some risk.
Right, right. There are no free trades.
If someone gives you a free trade, run away.
Yep.
There's a scam coming. You have to. You're not going to go to Vegas on a promise. I promise. If I lose, I'll pay later.
Huh.
You got to put some risk. You got to buy some risk. Now, we touch that. We're on the 5 minute. It's almost it's kind of the same idea as a J trade exhaustion. If you break that candle, the high of it, you close above it.
Yep.
And risk that candle. Bring it down to a shorter time frame.
Yeah.
When you bring it down to shorter time frames, you have less exposure.
100%. 100%. Because when we look at it, it's such a great point, Coach Paul. Because when we zoom out like this, if I'm buying it here, I'm looking at this. As if I'm wrong, oh shit, we're going here. Yeah. So get out.
Yeah,
and don't let it cost you a whole lot.
And it should be a hard trade.
Right. Those are the best ones.
It's like the hardest trades to make. You can make an argument they're the best trades.
Absolutely. Absolutely. Money is made in imbalance.
Yeah. So when you can't fade in don't fade in the middle. Right?
Yeah.
You fade on the edges. This was an edge. So why watch the 200? If we go, actually, this is a good exercise. Let's go back to, was it yesterday we went through the 200 on a half hour?
I think it was 2 days ago. Oh, so yesterday we crossed above it. 2 days ago we crossed below it.
Now let's do that same exercise on this day.
Cross below. 5 minutes. Honestly, I think I'm going to take the 20 and 50 off my charts.
Yeah, I kind of have to, except for the daily.
Yeah. Hold on 1 second. What day was that? This was the 7th. October 7th. And what we're doing here is just Janish, or was it Janish that said it was scary? It is scary. It can be scary, right? But if you have a way to approach it and a way to trade it.
We could see right there, it never broke that high the first time.
Nope.
So something to look at.
Yeah, never.
Anytime you take, most professionals look at it from different time frames. The shortest one is the one you execute on.
Yeah.
So I hope that helps you.
And Janish just pointed out, what did VWAP do? It went below that 200 moving average in this case.
Yep.
Right. So what was the volume's response to 200 moving average? Continue to sell. When we crossed back above.
They're not buying it.
Right.
I'm not buying it.
Right. Did I meet the Einstein? Yes, we did. That is who gave us the tour. Really cool experience on Monday. Getting to see the New York Stock Exchange. Good stuff here, Coach Paul. We talk a lot about, just the markets. We don't try to cherry pick examples because honestly, in doing this, the next time I see a test of the 200 moving average, I already have my game plan. Right? There's nothing to guess. There's no, oh man, is it a good buy this time? Is it a sell? Let the market decide it. Let the market decide it. And then we can go from there. But now I have an approach for how to trade it. All right, let's take anything else you got on the equities.
No, nothing else.
Right. We could be right back at all-time highs tomorrow.
It could be tonight.
Could be tonight, right?
And find a good place to get out and get short tomorrow morning if we do it.
Right. Silver, we went over early. It's actually the first market we talked a little bit about. We're not going to spend too much time on silver. We got a question here from who is this? Pretty Lily. How do you use volume profile? I personally don't use it too much. Coach Paul probably uses it more than me. But Coach Paul gave an example of using an overnight volume profile and then seeing how the daytime frame responds to it. I actually really like that. Is this just aggregates all of the volume, anything that happens overnight. And then when the real volume, like Coach Paul said it, comes in, what happens? How do we respond to this range? We got a point of control right here, this red line that I just made white, but I'll turn it back to red as soon as I figure out where the color thing is.
Yeah,
So-
that can be tricky.
This red line is volume point of control from last night. When the New York session opens up, what happens? Volume point of control from last night. We attach VWAP to the open. Price trades above, volume never trades above that volume point of control. That's what you just said. You said it on the S&P as well, Coach Paul. That's where we get urgency from. I really like
Yeah.
that setup.
Yeah, it makes sense.
I was listening to something earlier this morning, actually. Shout out to Tom Hugard. Some of you probably saw it. I mean, look at the same trade yesterday. Volume point of control from last night. Price. Did Coach Paul just find the infinite money glitch? Is this what this is?
If you like that, hit the like button.
Hit the like button. If you haven't done so already. We just keep giving out all the sauce. And here's the thing. Like I said, I was watching Tom Hugard on an interview this morning, and he was basically saying that technical analysis is kind of useless to successful trading if that's all you rely on, right? We talk a lot about technical analysis because we have to have a technical approach to executing trades, but in real time, we got to execute trades. And for me, Coach Paul, after hanging out with Dakota this week, that is my main thing. I got a text from Dakota who was just like, hey, man, your reads of the market are better than you think they are. And I know they're good. I can't get paid from them if I don't execute on them, right? So I have no problem giving out information because at the end of the day, you don't click the buttons. The information is just the information. So I really do like this. Good stuff, Coach Paul.
Yeah, thank you. And going back to it's volume. You
Yep.
know, and who makes the market? The size. It's not you and I. We don't care about us.
Right.
We're not even gnats in this game.
Yep.
But as they said, we don't have to be in front of the shark. That's a classic example of not getting in front of the shark. And reading it. That's our job. Read and react. And by the way, don't get false hopes here. You have to, like Coach Jay said, you have to execute it. I would say this, more than half of this game is in your head.
Yep.
And put it like this is the time I really watch baseball. I really enjoy it because it is under pressure. Every pitch, every at bat, every decision is times 100 in pressure. Well, that's the pressure we feel when we're putting on trades. I don't know if you're like if there's no money involved, it's easy.
Yeah. Right.
And when you see that, like I watch, it's amazing to me. I really enjoy playoff baseball, and it kind of reminds me of making decisions as a trader. Because you can have all the information you want. You got to get up to the plate.
Yep. Yeah.
And have a couple fastballs whiz by your head. But making the right, you can make the right decision still lose.
Yep.
How do you accept it? How do you play it forward?
Great point. Great point. I don't know how much I like watching postseason baseball now that the Yankees are out of it, but maybe there's still something to learn from there.
Well, you could cheer for the Cubs or the
Yeah,
Brewers.
there you go. Cubs are still in it. Um, Maui Man says you're gonna be putting volume profile on charts all night, aren't you? So I don't use
Yes, you are.
I don't teach volume profile that much. I could show you guys my Quant Tower charts. My Quant Tower 30-minute chart has a daily volume profile on every chart. I just don't talk about it much because I don't teach it, right? But yeah, I mean it's volume, right? It you could say volume anything. I'm going to take a look at it, right? It just is what it is. If it has to do with volume, I'm going to look at it.
And remember, it's not magic, it's a distribution of volume.
Right.
I mean,
Right.
this is not like I mean, it's the distribution of volume.
Yeah.
Where most volume came in and where was the median point.
Yep.
And right now, are we there? Are we above it or below it? And then you can start making decisions from what the players are doing, not what I think.
Right.
It's a great tool.
Great tool. Great tool. Uh
It's funny, I came full circle from it from working with Pete Stottlemyre,
yeah.
but we couldn't have a volume profile when I first started working with him because it was literally delayed hours. It
Mm.
wasn't
Delayed
live.
hours. Oh
This is
wow.
yeah, or you might be the next day, so it didn't really. But this is live.
Yep.
Great tool.
Absolutely. All right, we got some questions in the chat. Someone is asking about the fib tool, this little box here. What you guys see me doing every time I draw one of these, this is just a fib retracement tool. I'm using it like a rectangle because all I want to know is the high, low, and 50% of a candle. So normally it's this fib retracement here, excuse me, in your drawing tools. Alt F is the hotkey for it. I just took out all the levels in the middle. They're not as important to me, but if you're a fib trader, they're extremely important to you. Uh, you could also use a rectangle, but the hotkey for rectangles is just 3 keys instead of 2, and efficiency, efficiency. And then the red line is just anchored VWAP. Also in your drawing tools, 5 icons down on the left side. You have the projection menu. Halfway down that menu, you have anchored VWAP. Click on the 2 candles with a line going through it, and then click on a candle, and that anchors the VWAP from there. Let's take a look at crude oil. Coach Paul, you still there with me?
Uh,
Oh, you're breaking
Seemed
up.
to have become a robot again.
Yeah, yeah, you did. They turned my guy into a robot again. So let me go through some of these questions while he figures that out, and then we'll go through crude oil, and we got a request for natural gas from Yair, so we'll go over that as well. When open interest decreases, this is from Janesh, does that mean longer term market participants are not liquidating their long positions? It depends. So when Hogue is looking at open interest, let's say we have open interest decreasing on a down day. That means long liquidation, right? So open interest is an open position, and if we have open interest decreasing on a down day, that means longs are selling their positions. All right. How do you utilize the time and sales tracker? I keep my lot size filter at 10. I keep mine at 6. So I use when I'm trading on Quant Tower, I think I showed this yesterday during slow markets, but I use 2 time and sales. I have one, let's say it's for the NASDAQ, filtered for 6 plus, and then another one that's unfiltered. The unfiltered one just shows me the pace of the market. The one that's filtered shows me, where some of the bigger volume is getting traded. So let's go over crude oil really quick on a daily. Crude is just in this range. It's a tough market to trade right now. It did get a above average ATR day, above average range day, hanging out below this 200 moving average on the daily. Crude is just there's so much other stuff going on that crude is you know is it even don't want to say worth looking at, because if you're a range trader, you do see some opportunity in this, but there's not a whole lot going on in crude right now that I'm really interested in. Would you please explain how it is that when there's hardly any volume, the price keeps moving in big ranges? Uh, there's always going to be volume, and you know we get that question sometimes. It's just like, well, if you say there's low volume, how does price move? When there's low volume being executed, there's also low volume interest most of the time, right? If let's say we're in a low volume time, right? There's five of us trading, and everyone's trading 10 lots, right? So somebody has 10 lots to sell, somebody has another 15 to buy. That buyer of 15 is going to go to the seller of 10 and be able to move price. Um, because there's just not a lot of interest in being traded at all. But those market participants can move the price in that range. So you're always going to right. If price ever just goes flat, that means almost no trades are happening, right? But there's as the if the markets are open, there's somebody placing a trade, so it can still move around in the range. It, the low volume, extremely low volume like this is why we get range bound markets, because let's say between $62 and 62.40 in crude oil, there is 10,000 contracts passively being sold, right? So every tick above this, between 62 and 64, there's 10,000 contracts being passively sold. Somebody would have to buy all 10,000 of those between those prices for price to get up to 62.40. But there's no volume trading, right? So we're not going to get there. Hopefully that makes sense. Take a look at natural gas. We got this trend line. So Yair says, can we go over natural gas? I'm looking at a bounce at 320 or deeper. I could see it go lower with storage being greater. So 320s is interesting. So we had this trend line. We drew this a little while ago from the high. I believe this was the high of the year. Yep, high of the year trend line in natural gas. We traded above it for a little bit. Now we're closing at it with a retest of it. Let's see if this trend line breaks. We may go lower. So I would put that trend line on my charts and keep that there. I haven't traded natural gas in a little bit, but it does move. Honestly, it's a better trade than crude most times. We can see what's that white line. I got to make my trend lines a different color. Let's make these. Nope, can't do orange. I got orange already. Let's do pink. But the white line, 200 moving average, near the high of the session again today. We crossed below it yesterday pretty aggressively. Came back up. We tested the candle that crossed it, close to the candle that crossed it. Yeah, this might be turning. Let's see what happens at this trend line here in natural gas. It's right around that $3.20 that you were looking at, Yair. So I'd be watching the market's response to that. I haven't watched it too much to see what time it's usually trading. If we look real quick, it looks like right around 7 a.m. Eastern time, we're seeing some volatility in natural gas. So I might check, in the overnight session, a lot of times, unless there's something going on, we get this type of consolidation here. So I might take a look at natural gas if I was going to trade it at 7 a.m. Eastern time tomorrow, kind of get a gauge of where the market is sitting, and then see some opportunity from here. Because yeah, crude oil is a tough one. If you want to trade an energy market, natural gas might be better. Heating oil might be better. I don't trade heating oil too much, but look at where we are. White line, right? We could do the same thing. When this market comes down and tests that white line, I could add a VWAP to the 5-minute candle that does it, get a response from there from the market. Movement happens at 1:30 a.m. to 7. Makes sense. All right. Any other questions that you guys have? We got about 5 minutes here. Coach Robert is doing a class in Discord right now. And Coach Hoop is doing a class at 6 p.m. Eastern time. Any other questions you guys have? If not, go ahead and end it there. Manfred, you have a good one. Trying to think if there's any other markets that are interesting. We could take a look at platinum. right at that white line as well. Am I playing Battlefield 6? I didn't buy it. I didn't buy it. I might get it. I bought a PS5 like 2 weeks ago, and I feel like the market is enough of a video game. The market is enough of a video game. Battlefield is a pretty good game though. Um, let's see. But any other questions outside of that? Yeah, I do play NBA 2K26, and I'm not allowed to bet money against anybody in the chat because that we cannot do that. But no one in this chat is beating me at that video game. But trade well, everybody. Manage your risk. We have one more day to go in the. You're up on the week, down on the week. You got one more day. You don't need to make up the losses for the entire week. All you need to do tomorrow is take good trade setups when they present themselves. The market is going to present opportunity. Understand that whatever opportunities the market is going to present, based on your strategy, they'll be there, right? You don't have to force the market to give you an opportunity. It's going to show it to you. It's going to be clear. Make sure you're in the right mental space to execute on your strategy when it presents itself. That means prepping yourself beforehand to be ready for it, but then also taking the actions in the right way that you can actually see your trades play out. So that means not over leveraging it into any trades, taking a position size that you know your account can facilitate, not based on what I want to make. What can my account actually facilitate to see me trade this trade and go from there, right? We want our trades to be able to work out. And more often than not, if we trade what we've measured, we'll make way more profits than what we think we can by over leveraging, right? So thanks everyone for joining. If you haven't done so already, hit that thumbs up button. I'm going to go try to find Coach Paul in the ether somewhere. And we will see you all tomorrow. Have a good night.